This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Traders are deploying smaller, costlier vessels to ship displaced Russian oil from European ports to China, in a rare move as Western sanctions on Moscow force them to use unconventional methods to transport the product. About 5 million barrels of Russian Urals crude was scheduled to load in April and May, destined for China on 4 Aframax-sized tankers that each carry 730,000 barrels and 2 Suezmax-sized vessels each holding around 1 million barrel, according to shipping reports and research by Refinitiv and Vortexa. A very large crude carrier, VLCC, capable of taking 2 million barrels, was the norm for shipping Urals oil to China before Russia's invasion of Ukraine.
Oil prices fell on Friday, reversing in volatile trade, pulled downward by the U.S. heating oil contract that plummeted by more than 20% at one point on the day of its expiration. The front-month U.S. heating oil contract, which is a proxy for diesel prices, soared to a record high of $5.8595 a gallon before falling as low as $4.4067 a gallon. Diesel futures have climbed as investors worry about tight supplies globally following Russia's invasion of Ukraine. The heating oil contract expired on Friday, along with the global Brent benchmark and U.S. gasoline futures. Volumes in all three front-month contracts was low, creating outsized volatility in the market and leading to late-day sell-offs, analysts said.
Moving on to the top news in the energy sector.
Indian refiners are negotiating a 6-month oil deal with Russia to import millions of barrels per month, multiple sources with knowledge of the matter said, as the world's third-largest importer seeks more Russian crude despite Western sanctions. India has already bought more than twice as much crude from Russia in the 2 months since its invasion of Ukraine on February 24 as it did in the whole of 2021, according to Reuters calculations. Russia calls the attack a special military operation to disarm Ukraine. Western sanctions against Russia have prompted many oil importers to shun trade with Moscow, pushing spot prices for Russian crude into record discounts against other grades.
The U.S. Environmental Protection Agency issued an emergency waiver for a higher-ethanol gasoline blend on Friday, allowing summertime sales of the fuel in an attempt to help lower gasoline prices at the pump. The move represents a temporary win for the biofuels industry and corn farmers, as it will likely expand sales of corn-based ethanol, and a setback for oil refiners, which view ethanol as competition. It also is an attempt to temper the pace of inflation, which has surged to a 16-year high. Rising consumer prices are seen as a major vulnerability for President Joe Biden's Democratic Party leading into the November midterm elections. Next, we have the top news in metal markets. The World Trade Organization, WTO, accepted some of Turkey's complaints against European Union measures designed to curb imports of steel and advised the bloc on Friday to bring them into line with global trading rules. The EU introduced safeguard measures in July 2018 in the form of tariff rate quotas. They allow various grades of steel to come into the bloc free of tariffs up to certain quotas, but any further imports face 25% tariffs. The safeguards were due to last 3 years up to the end of June 2021, with quota limits increasing 5% each year, but Turkey complained that the increases were less than 5% each year. The measures have also been extended until 2024.
Copper prices rebounded on Friday after top metals consumer China pledged more support for its ailing economy and the dollar fell from 20-year highs, but the metal was still set for its biggest monthly fall since September. A weaker dollar made greenback-denominated metals cheaper for buyers using other currencies, which increases their attractiveness. Meanwhile, the top decision-making body of China's Communist Party said the country would step up policy support to stabilize the economy and offset the impact of lockdowns put in place to slow the spread of COVID-19.
We will now look at the top news in the agricultural sector.
The European Commission cut its forecast for the 2022-23 European Union wheat harvest on Friday, but maintained its projection for record EU exports as war disrupts supply from Ukraine. In monthly cereal supply and demand estimates, the Commission cut its outlook for usable production of common wheat, or soft wheat, in the July 2022 to June 2023 season to 130.1 million tons from 131.3 million tons previously. The new harvest forecast, which the Commission attributed to revisions for France and Sweden, was almost level with 2021-22 production of 130.0 million tons.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.